Well, good evening. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Wednesday, and we are at the 23rd of April already, 2025, just around 5:30 p.m. Central Time. Well, the gold market is lifting. It was down today pretty good, but it's lifting up $29. The silver is up about 4 cents. Copper's giving back from the 490 level a little bit, and you're pretty much unchanged in the platinum market. The dollar had a monster rally, 100 points, okay, and you were down pretty hard in the euro as you had been over 115 and you're back to 113. But this is just part of the trade. The big question for the dollar is there another leg down? You've completed what we call at the Linn group, it's Linn and Associates actually, what we call our fourth price count. The most you typically get is 5, and let me take away that word. The most you can get on our price count is 5. Beyond that, it just stays in the 5th from everything I've understood with how they come up with the calculation. How often do we get to the 5th? It is exceptionally, I want to use that in quotes, exceptionally rare. So the fact that the market got down to a 4th count, which in itself is rare, is something. And now the question is, have we seen a trade bottom? Let me tell you where I think that part of this story goes, because it's in my special report that goes off our website tomorrow. If we can't make a tariff deal, you're going to the 5th. If you make a deal and the deals look reasonable and they're going to hold up and they can add something, the dollar probably gains back the strength. Has the U.S. shot itself in the foot with what President Trump has done? Absolutely. Has the U.S. lost world prestige and credibility? Absolutely. Does the president believe it'll come back? Yes. But time is against him. This thing goes out, like some people are saying, 3, 4, 5 months. You don't think you're going to be in a recession? Tell me how many businesses can make a decision in this environment, all right? Because are you telling me that the tariffs that are supposed to go into place shortly now, remember he gave a reprieve, the president, aren't going to come back? Just think about all that I'm saying. So those are the things you're dealing with. On the energy markets, is it a supply-driven market or a demand-driven market? Well, I think what's happening right now in part of this are the threats the president's making to Iran and Russia. That, hey, we either get these deals done from both of you, the one with Russia and Ukraine and the one on the nuclear treaty, or we're going to be shutting down your oil. It's really that simple. That's what the threat is. So it's a demand, no. It's supply-driven rally because you'll take supply off the market. And what did OPEC today say? Right off the bat, they're meeting to discuss even producing more oil on the market. They're waiting in the wings to flood the market with oil to make up those differences should it happen. They're not helping the U.S. They're not saying that. But read, it was in my newsletter today as to what's going on. It's the only thing that makes sense at this point. All right. Let's take a look, if we could, at gold, but maybe before we get to the chart, we take a look at the news for tomorrow. And let's get there. We'll come to the currency report right after that, right after this report. You're going to get jobless claims at 7:30. You're going to get at 7:30 the Chicago Federal Reserve National Activity Index for March. You're going to get the advanced durable goods data at 7:30. Existing, today we had new homes, and they were good new home sales. We're going to get existing home sales data for March at 9 o'clock. The natural gas storage report comes out at 9:30, and the KC Fed Composite and Business Activity Index at 10. Now, you might say, I don't put up here for you, hey, what are the estimates where they're at? That's in my reports in the morning. That's in my written report in the evening for my paid subscribers. So they get more information than you get here for free. The whole idea here is this is a feeder. It's the reasons you should be with me on, see the morning videos, the subscriber ones, and get the twice daily written updates from me if you'd like to get that. All right. So let's go back, if we could, now to the chart data and see where we're at. If gold finished here for the week, it'd be down almost 1% on the week. The market peaked out, and I think you'd agree with me, on Tuesday. You had follow through from the market today, and now the question is, where might it go? All right. We've got the swing line still with higher, well, let's start maybe here, higher lows, and then the higher highs. Agreed? We haven't taken out that low yet. The 18-day average is moving up, and it's getting to the point now of 32.05. That's my line in the sand. So if you were to ask me where do I think the market's going to try to fight a battle if it keeps breaking in quotes, I would say the 32.0490 level. The resistance number now will be, again, the upper Bollinger Band if it rallies, but there's a window envelope in there that we don't show on these particular tapes. There is another part, and here's something bothersome. If you and I take a look now at slow stochastics, on the close of business Tuesday, I don't want to go to Wednesday, both numbers were over 80. Both were over 80 on Monday, and last Thursday, both were over 80. We were closed for Good Friday. So you got into the marketplace and you finished today, Wednesday, where the number closed under 79. And now for Thursday, the number's down to already 69. The odds of it re-embedding, you'd have to probably go up and take out 35.09. I'm just giving a guess, but it's an educated one, to get the market to re-embed. So when this occurs, the high probability, not a guarantee, the high probability is price and the 18-day average are going to try to come together. It could take a few days, it could happen right away, but that's what I think they'll do before you get over 35.09.5, if you even go back up to that number. Look what happened on the gold-silver ratio. As the ratios come in, you've now gotten to the point where gold has slipped back under it. Now, it's hitting it for this point. It's not a trend yet, but another day or two and we can talk, maybe it is a trend that is happening there. As for silver, it's the unwinding of the gold-silver ratio. A lot of traders trade that ratio rather than a net position in the metals, and you found your support at the 18-day average. You had a huge reversal to the upside today, and you're about, at this point, close to unchanged. But that's what's making that reversal, because the gold market's fallen $200 an ounce in 48 hours, basically. In the copper market, I'm amazed at what I keep reading, how much copper China is consuming. So China's not just looking at the U.S. tariff war and saying, yeah, that's our biggest client, and we know it. They're out there, and they're all over the world trying to strike up deals. And as these deals happen, they're going to have product to sell. Now, there's a difference between selling and flooding a market. But the copper production and what they're using, they don't produce copper, they consume copper. As they're getting that copper, they're starting to go through the stockpiles and taking in more. I'm always watching that from the LME exchange and what's going on, and that seems to be the supportive factor in the copper at this point. It is overbought. I certainly think it's vulnerable at this point, and if we can't get tariff deals done, we being the United States and everybody, we have 65, 75 countries we have tariffs on, that's going to be very bad and hurt world business. That would hurt copper. At the end of the day, the U.S. is a monster engine. As big as China is, we are the buyer. China's exporting, we're buying. Keep that in the back of your mind. In the platinum market, you're stuck in all these moving averages. You're overbought. Don't see anything that the pros are doing there. Now, in the dollar, with this close, you lost the bearish embedded reading. So this puts, just like I said in gold, the possibility that the dollar wants to rally more up here before it goes down and takes out those lows, if it even takes out the lows again. I go through in my dollar report that goes off the website tomorrow. And in that report, what I go through with you in great detail is how the market is working and how many what we call price counts the market did. A price count, if you think about it, are objectives to the upside or downside. And if you've ever studied Gann or Fibonacci analysis and waves, it's sort of like that. It sort of fits in. But instead of using the seasonal charts in this report, because they don't matter right now, and you'll go, well, why is he talking? What's wrong with the seasonality is President Trump took it over. By declaring this tariff war and putting everything as he's done now, there's so much uncertainty, and he's every day, the social media, with what he's doing, he's taken over control of the emotion of the market for this short period of time. Now, he either gets deals done or he falls flat on his face. We will see what he's done. He's done 18 deals, he said, on paper, where they're going back and forth shoveling. He hasn't had one signed. So you're really no good until you get your first deal done, because that's the template. I keep hearing it might be India. I keep hearing it might be the UK. I don't know who it's going to be with. I wish it were with our trade partners, Mexico and Canada. That's our biggest partners. As much as I like the other countries, I want my neighbors, all right? And I hate the fact that the U.S. and Canada are having words of any type. The American people, I doubt, feel that way at all. Again, governments are different than the people of a country. All right, how do you get the report? Go to iraepstein.com. It's there. The cursor, if you move it up here, you'll see an icon. You can just click on it. It'll take you there, and I'll catch up with you tomorrow.